Welcome in this video. Will Xcn coin continue to rise? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. A careful examination of the chart reveals a pennant pattern, which is quite remarkable and important for technical analysis. This pattern represents a short period of consolidation in the markets, usually following a strong bullish move. In other words, it is a chart pattern in which the price comes to rest after a rapid rise and draws a narrowing structure in this process. This narrowing pattern also symbolizes a phase when traders are realizing profits and new buyers are gradually entering the market. In the technical analysis literature, this pattern is often described as a continuation pattern, and it is assumed that the price will continue to move in whatever direction it was formed. This typical pattern, especially in the immediate aftermath of an uptrend, is both easily recognizable visually and provides traders with important insights into potential targets. In the current case, we can see that this pattern comes right after an uptrend. This makes it clear that this pattern falls into the category of a bullish pennant. The strong price action at the pennant's pole indicates that a strong wave of buying has entered the market, and investor psychology is shaping in a positive direction. The real significance of the pennant lies in the target it presents. Usually in such patterns, the price moves in the same direction from the pennant as it did before the pennant formed. This means that whatever the upward momentum was before the pennant, a similar momentum can carry the price upwards when the pattern breaks. In this context, the target calculations offered by pennant patterns are very important for traders and are often central to medium-term strategies. On the current technical outlook, a breakout of this pattern to the upside is likely to be quite meaningful, especially if the upper resistance line of the pattern has been tested or is about to be tested. This breakout moment becomes very critical. Because in such patterns, the price usually experiences a sudden acceleration at the moment of the breakout. This acceleration signals that the squeeze inside the pennant is over and the buyers are back in control. Also, when we look at the internal structure of the pattern, we can see that the volume behavior is consistent with the classic pennant pattern. Increasing volume at the beginning of the pennant, followed by a downward trend, is one of the factors that support the technical validity of this pattern. A noticeable increase in volume, especially at the time of the breakout, is a confirmation of this pattern and provides the necessary engine power for the price to move towards the target. At this point, the most important factor for traders to consider is the volume support of the breakout. If the price is moving with high volume support while breaking the pennant upwards, this is a very strong signal for trend continuation. However, low volume breakouts can often lead to trap moves and result in the price moving back into the pattern. Also, the psychological effects of the pattern should not be ignored. Because the pennant pattern is a well-known and widely used pattern among traders, many traders recognize it and tend to take similar positions. This can lead to increased liquidity and a stronger move at the breakout. At the same time, since this pattern is a structure that institutional investors also include in their strategies, the breakout direction may also give us clues about the direction of institutional capital. In conclusion, this pennant pattern on the chart gives a very positive signal in terms of technical analysis. At the moment, the price may be positioned at the lower boundaries of this structure or in the middle zone. However, in case of an upside breakout, it is technically possible to calculate a target as bullish as before the pennant. This target can be a great advantage for traders, both in terms of developing a strategy and managing their positions. As one of the most reliable continuation patterns in technical analysis, this structure stands out as an important detail that should not be ignored in the current market outlook. In short, if the pennant pattern breaks upwards in accordance with the rules, it could open the door to a very impressive and remarkable uptrend for the price. But we need to look not only at the patterns, but also at other metrics. Stay tuned. In our technical analysis based on Elliott wave theory, we are still in the third major impulse wave. This wave is generally considered in theory and practice to be one of the strongest, longest, and most aggressive bullish moves. In other words, the market's momentum gains the most momentum during this wave. While the first and second waves represent the indecision of investors, the testing of the direction of the price and the formation of a new trend, the third wave is the stage when the direction becomes clear and the big players step in and make strong purchases. Looking at the current price action, it seems that the third wave is still actively developing. The price is very close to, or has touched the 272 Fibonacci extension level. This level is one of the typical targets for the third wave and can work as a strong technical resistance. But if the price manages to break this level, technically the next potential target will be the 272 Fibonacci level. This level appears to be the next expansion target, and seems quite achievable, especially if the momentum continues. It should be noted that the most characteristic feature of the third wave is that the price rises almost non-stop, and corrections are very limited. In other words, market psychology during this phase is completely buy-side, with the majority of traders positioning themselves for a further rise in the price. This, together with a significant increase in volume, leads to a further acceleration of the price. If the price breaks the 272 level on strong volume, this would signal a new phase, not only technically but also psychologically. This is because many traders consider these levels as critical thresholds and prefer to open positions after the breakout. Since such a breakout would be a confirmation of the pattern and wave structure, the bullish process up to the 272 level could begin quickly. The third wave is usually the backbone of a trend. At this stage, investors stop hesitating and become convinced of the strength of the trend. This accelerates the inflow of new liquidity into the market. If this wave develops in a pattern such as an expanding triangle or a pennant, it is possible for the price to accelerate further. Breaking resistance levels one after the other can trigger algorithmic buying and manual traders to take positions for fear of missing out. On the other hand, one of the most important details to pay attention to in such high-potential movements is the volume behavior. If the 272 level is broken on increasing volume, it indicates that the breakout is healthy and sustainable. If this breakout occurs on weak volume, the price may soon retrace back into the pattern, which could turn into a bull trap. Therefore, traders should pay attention not only to the levels, but also to the market reaction to them. It is also important to note that the third wave is not always a linear movement. It contains its own subwaves, and there may be mini corrections between these waves. However, the general direction is always up, and each new mini correction sets the stage for a new rise. As of the current structure, the third subwave within the third wave may also be active, which is known to be the most bullish part of the wave structure. If this subwave is indeed active, it is very likely that the price will target the 272 level. From a technical analysis point of view, one of the main conditions for the third wave to expand and reach the target levels is that the price can easily break through the intermediate resistances. Currently, the area around the 272 level plays a decisive role in this regard. If the price can break through this barrier and maintain its permanence here, it will psychologically direct investors to higher targets. This can be considered as a very positive signal for the trend to continue. As a result, at this point, we are moving in the third wave within the framework of the Elliott wave theory, and the price is very close to crossing the 272 level. If the price holds above this level, the next target will be 272. Reaching this target is not only a possibility, but also a strong technical requirement, especially if the market momentum continues to increase and the appetite for buying strengthens. This move is technically very feasible. The third wave is the most profitable wave as it can extend as long as it wants. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.